Hello and welcome to the Be Formless Flow Driven CEO and VC podcast where we are reshaping life, leadership, business and investing. And today I am welcoming from the wonderful Cambridge in the UK, Martin Rigby. Welcome to the show, Martin.
Hi, B.
Hello. How are you, Martin?
I'm very well, thank you very much. It's a lovely sunny day here in Cambridge.
Is
So a good day to have a great conversation, a positive conversation.
Is it really sunny? Is it really
It
sunny
is,
in
it's
Cambridge?
bright. Yeah, bright sunlight. It's absolutely lovely. It'll be a nice warm day by English standards, less than 20 degrees.
Gorgeous. Gorgeous. I love that for you, given that you're heading into summer and
Exactly.
Cambridge is such a beautiful.
Lovely and green, and the river going through the middle of the city. It's absolutely lovely.
Yeah, absolutely. And I'm really privileged to be talking to you today. And I think we're going to have quite the conversation, quite the chat. It's free flowing, as I said to you. So I think the listeners are going to get a lot of insights, a lot of fresh perspectives, and a lot of lived experience also from you, because let's get into it. You have quite the journey, quite the story in terms of a career. And you just said something to me pre-show that I know you're going to share. And I was like, oh, that's something else that you hadn't shared when I spoke to you the other week. And I always love a surprise like that. You're the managing director of ET Capital, which is a Cambridge-based venture firm, and it invests in science and technology companies emerging from one of the world's most established innovation ecosystems. And I'm very keen to unpack that with you as well. Your perspective on venture is shaped not just by investing, it's also by the experience on the other side. And what I mean by that is, after beginning your career, you actually had a career pre that. I'm not going to spoil that to the listeners. After beginning your career in venture capital, you spent nearly a decade building and running a digital music business, and it was a period that fundamentally reshaped how you understood entrepreneurship as, I love this bit, and this is you. You said this to me the other week, as a human journey, not just a financial one. Today, that experience informs a different approach to capital. And at ET Capital, you and your team, Martin, you explore models that move away from control-driven venture towards something more aligned, where investors support without oversteering and founders are trusted to lead. Through the Cambridge Venture Index Fund, and I know you'll talk about that as well, you apply an index-style model to early-stage investing, backing a broad range of companies that emerge from the Cambridge ecosystem while intentionally limiting heavy board intervention. It does feel very future and very modern in terms of that, like that, I guess, limiting the heavy board intervention. And your work sits at the intersection of conscious capital and venture evolution, rethinking how portfolios are constructed, how risk is shared, and how capital can enable ecosystems to grow rather than narrowing outcomes to a few winners. I will also note that with regards to the Cambridge Venture Index, you've just launched your second round as well. I'm going to hand it over to you to share a little bit about your journey.
Well, thank you very much. And that was a very comprehensive introduction. And I suppose it's testimonial to my wrinkles. And over my shoulder, you can see a picture of me when I was a younger man.
Yeah, I can see it now. Yes.
And that was me in the army. So you gave me a hook to talk about the fact that I had an earlier career as a regular soldier in the British Army, which I did for 7 years after university. I'd originally read history at Oxford. I spent 7 years in the army. And then at the end of it, I was very lucky to serve with a Canadian officer called Jim Morgan, who was very entrepreneurial. And we talked about setting up a business. And, we had this dream of Morgan Rigby Plaza in New York City at some stage in the future. We made our
I
business.
love that.
So I left so Jim was time barred by the Canadian Army because he'd been to the staff college and they make you serve more time if you've done this intensive training, which they paid for. So he couldn't leave when I left. He was going to leave a year later. And so I thought, well, what should I do while I'm waiting for Jim to start our great enterprise? So I went off to business school at Cranfield, did an MBA. Anyway, to cut a long story short, Jim, for his last year, was posted back to Canada, to Montreal in Quebec, where he met the lovely Francine, who turned out, of course, to be a delightful woman who he fell in love with and married. And I'm afraid that he became a schoolmaster, or teacher, as one would say in modern terms,
There you
and
go.
ended up in Upper Quebec, pursuing a career in education rather than joining me in business. So at the end of my time at Cranfield, I was lucky to be recruited by 3i, which was at the time was the sort of dominant UK private equity and venture capital operator. It had been set up after the Second World War to try and improve finance for SMEs in the UK, small and medium-sized enterprises in the UK. And it was set up by the London clearing banks and the Bank of England, and it became a very dominant player. At the time that I joined in the mid-80s, it had 16 offices across the UK. It employed 750 professional people, and it had probably a 40% share of SME finance, equity, and lending in the UK. And it was also a pioneer of early stage technology investing. They had an office in
Interesting.
Cambridge, and they sent me to Cambridge to invest in early stage technology.
Did you
I'm not
did
going
you
to
know
say and the rest is history because we're going to talk about it, but nonetheless, that was the beginning.
did you know much about early stage technology then? Like, was this something that you fell into?
Good question. That's such a good question. And thank you for asking that,
No, that's
because
okay.
I'd come from a family business background in film and television technology. My father, although he also went to Oxford and read law rather than history, but he was a natural technology innovator and he used to devise machinery for the film and television industry. He did an ultrasonic film cleaning and treatment machine, which was taken up by the German television industry. So I think I inherited from him an interest in mechanical, physical, electronic things. So I was always wanting to get into technology investing rather than into generalist investing. So when 3i sent me to Cambridge, even at that time in the mid 80s, it was the home of Acorn Computers, which is the precursor to ARM, the global semiconductor company,
Yeah.
and also Clive Sinclair's Sinclair Research, which produced, the ZX Spectrum and the ZX80 personal computers. And in fact, Cambridge was sort of the epicenter of sort of low-cost microcomputing for consumers. The sort of computers that you plugged into the back of your TV center and played Pong on when you weren't programming in BASIC.
So
Though it was really buzzy. It was extraordinary,
mm,
when I arrived. And one thing which is worth remarking on is that we've only had, in my career in Cambridge, only one recession. And that recession was in 1989-90. There was a little bit of a national recession in the UK, having had a boom during the end of the Thatcher government. And the recession was caused by the fact that the main retailers in the UK, WH Smith and Boots, people like that, were overstocked with these computers built by
uh-huh,
Sinclair Research and by Acorn. And
right.
they suddenly stopped stocking them in 1987, I think it was, the autumn of 1987. And we had actually a serious recession locally in the regional economy here in Cambridge, because so many businesses have been set up to provide services and to
Yeah.
components and things into Acorn and into Sinclair. It really was quite tough. People who were technical authors and marketers and were losing their jobs. What do the Americans say? Got their pink slips.
Yeah.
Um, and in the UK, you got your UB40.
Yeah. It's interesting, isn't it? Like, even that as an observation, right, in terms of just the revolution we're going through right now, and we're going to get into this, even more so. And, what's happening from a white collar perspective and the change in, we're in this kind of upheaval when it comes to it's geopolitical as well as an economic, like I was just watching the news then and listening, and it was like, that our inflation rate is the highest it's ever been in the last 3 years. And it's interesting that technology, in a way, caused what happened to your regional area back in the late 80s, and here we are,
Well,
right?
I think actually that's very interesting you should say it. I think the technology can't be blamed. What
No.
can be blamed was that we had over concentration
Mm,
within the cluster on two businesses, which was Sinclair and Acorn. And
yeah.
actually, after that, what happened was that the cluster became much more diversified. I mean, and today, there are, 20 companies which would be the same sort of size and economic impact as Sinclair and Acorn were in those days, and a
Mm,
whole ecosystem of smaller ones as well. So there isn't the same dependence. I mean, I suppose to some extent, Cambridge was a two-horse town in the same way that, in the Midwest, you often get, beyond the Alleghenies, beyond the Appalachians, sorry, in Illinois and places, you get, one town, which is a big chemical plant or a big coal mine. And when that closes, it creates economic devastation. It was that sort of concentration in a
Yeah.
much, much milder way, which was
Yeah.
the challenge in Cambridge at that time. But the legacy was good because, if you're unfortunate enough to be a chemical worker or a coal miner, it's hard to reskill for the new
Mm.
world. But
Mm.
in Cambridge, the people who had been supplying, working with, tracting to Sinclair and Acorn, of course, had skills which were eminently transferable to
Yeah.
other technology businesses. So in some ways, that sort of throw the pieces up in the air and have them fall down again helped the cluster become more fertile, provided more talent to go into other businesses which were addressing other areas of technology. So I would say that, in fact, probably, although it was painful for a while, actually it helped contribute to the steady growth of the Cambridge cluster over.
And I guess that's my point in terms of, from these sorts of situations, there's an endless possibility that opens up, right? And so, like, we can look at things like a doom and gloom perspective, but this is where real innovation shines. And, the ability to use the skills you've got and then build on these skills. And I think that's the point we're at right now. And I guess my point was with regards to what, you experiencing that in the late 80s. You're seeing like the pattern recognition in terms of what you're seeing throughout your career journey is quite incredible from a technology perspective as well, and then also from the human perspective also. It's fascinating.
And I think that you're quite right. And I mean, the parallels, for example, if you look at Silicon Valley after the dot-com collapse
Mm.
in the spring of 2000, you then get, what was her name? Sarah Lacey, the journalist, described as, the Web 2.0 phenomenon around businesses which were building on the talent which had been was becoming repurposed. It was terrible in 2000 to 2004 in Silicon Valley. Lots of people didn't have jobs, so were looking around to try and see what they were doing. And yet out of that came the second generation of Web 2.0 businesses. So, yeah, I mean, that process of change is really important.
Absolutely.
But I think there's something else which, again, makes Cambridge and, of course, Silicon Valley different, which is these world-class universities that Cambridge has got and Oxford has got, Stanford, Berkeley in the Valley, and others besides. I don't want to belittle other universities around. They act as magnets to talent. So
Mm.
people come to students, they stay on to be doctoral and postdoctoral researchers and students. They beget new companies and enterprises based on research that has been carried out at the universities, which is the sort of making of an ecosystem, which then has a self-sustaining life.
Mm.
And it's a magical quality, which is it's got to be a nice place to live because
Mm.
otherwise people won't stay. It's got to be stimulating because
Mm.
it's got a good university and therefore there's intelligent and adaptive people around that you want to be with. So it's
Mm.
sort of socially
Mm.
homogenous. And also there is economically got economic opportunity because businesses are being created and jobs are being created. There's something for you to do.
So how did you then, so tell us a little bit about, so you venture then to entrepreneur, then back to obviously ET Capital and starting ET Capital. Tell us about that. And I guess, the experience from going to venture, you moved to Cambridge, and then how did you then become the, running a digital music business?
So you touched on a very interesting point early on, which is which is one of the learnings of my life is that backing people is a sort of inherently fascinating, but potentially frustrating, and always full of unexpected outcomes
Absolutely.
activity, which is inherent to being a venture capitalist. And I suppose that one of the things when I joined 3i was had much more of a financially driven approach to investing. So it used investment structures to make sure that it, as the investor, got value out of the investments, irrespective really of whether other shareholders did as well or not. But that wasn't the way that early stage technology investing was being done elsewhere, particularly in Silicon Valley, where it was much more about selecting a great technology and trying to marry it with a good management team, and then the investor taking an active part in supporting
Mm,
the business to go through the growth phases and helping to de-risk it and seize market opportunity and succeed. And I suppose that we had tried to apply that sort of approach to general investing around Cambridge, not particularly technology focused. And it sort of hadn't worked. It was quite frustrating. We got very mixed results. I think at the time, entrepreneurship wasn't as well embedded in terms of people going to university and receiving some sort of entrepreneurship training as part of their degree
mm,
program, science field. That wasn't happening prior to the 90s. And so I was a bit frustrated, to be honest. You know, we made a series of investments. Some had gone okay, many hadn't.
mm.
And I was feeling that there was a bit of me which was saying, well, I could have done a better job. You
Oh,
know, let
yes.
me have a go at being an entrepreneur. And so I had a, a, a good friendship with a guy who had been a software engineer in one of the companies in which I'd invested, Rich Irwin. And he and I got together and talked about what we might do. We identified the fact that two things were coming together: mobile and data were coming
There you go.
together. And surely we could build a business around the combination of mobile and data. And so we started off with a business which was going to enable people to back up all their critical data off their mobile phones, you know, contacts and calendar and stuff. But, you know, we weren't the first people to do that. Other people were already doing it.
Mm,
And it was becoming integrated into the operating system of the mobile phone. So maybe it was going to be that gap was going to close. So instead, we looked at music because, you know, what's the most valuable thing you have on your phone? And at that time, which was in the mid 2000s, around 2006, 2007, it was the transition from phone to smartphones. So the
yeah,
Nokia N95 was a good example of a very early smartphone. And, you know, there were other offerings from Ericsson and other handset makers, Samsung, obviously, most importantly. And then, of course, in 2007, out came the iPhone. And the iPhone, you know, the first generation iPhone even looked like an iPod. Do you remember the
totally.
iPod Nano, I think it was?
It was,
Um,
yes.
you know, looked exactly like a first generation iPhone. And suddenly we realized, well, actually, people are going to have all their music on their phones. So why don't we help them look after that music collection? You know, because we were all still thinking about music on a phone being like using iTunes on an iPod, so that you
Yeah,
would download songs and store them on your device and play them, because nobody thought you were going to get stream music over the mobile network.
no.
And so we thought, well, what we should do is give people a backup opportunity for music off their phone so that they don't lose the tracks if their phone crashes or gets stolen or whatever, and they can restore them, etc. And maybe then they could play them on their desktop, and maybe then they could play them on their home hi-fi or whatever. You know, there's all sorts of interesting angles.
Yes,
So we did
absolutely.
that, but then we had to think, well, how are we going to make some money out of this? You know, what, you know, actually storing all of this. And we were early adopters of Amazon AWS. So we were using the cloud to store this music, and we were paying quite a lot of money for the storage. So how do we make money out of this? Well, we said, well, you know, the music industry is quite generous. It allows people to play a 30-second sample of a track, so long as there is an opportunity to purchase for free. So why do we let people pay 30-second samples of each other's collections using our cloud service as a sort of free Spotify, but
Yeah,
based on 30-second
ahead of
samples?
your
So
time.
that's what we thought of doing. But we weren't we weren't the first people to think about this. Daniel Ek had already started Spotify about the same time as we were starting.
Really?
He was starting.
Yeah, okay.
And he was a clever enough man to realize that getting the licensing was the critical thing. And
Mm,
so he was prepared to say to the music industry, let me use your music on my streaming service, and I'll pay you a royalty for every play,
mm,
even if I don't monetize it. And that was actually a stroke of genius. Whereas we were spending our time going to the major labels saying, well, look, we want to give it away,
yeah,
but we'll try and get them to sell it. And if to buy it rather, and if we sell a song to somebody, then you'll get the royalty on that. And this was all rather sort of a bit of a mess, and it wasn't really working. We couldn't think what to do. And then we had a
sorry, man, can I put you there for a second? Because you said just before, you know, when you were on the you were, I shouldn't say on the VCs, like that when you were in 3R you were working for and you were getting frustrated and going, I can do this and I want to be an entrepreneur, and surely, and obviously your family as well, you know, from an entrepreneur perspective, you would have picked up on things. When you were actually in it, did you have a moment of, oh, it's actually not as easy as I thought it would be, like in terms of coming onto this side and kind of realizing, actually, this.
Absolutely right. Absolutely right. Yeah,
Sorry,
I
I
mean,
had
I
to
completely
ask you.
agree with you.
I wanted to see
No, no,
what.
no. I think it's a great question, and I must say that when I started in venture capital in my early 30s, I was probably pretty snotty, to entrepreneurs who I thought were getting things wrong, and told them stop it and whatever, and quite patronizing. And one of the things that came out of running this music service, and Rich and I ran it for 9 years. We raised, several rounds of venture capital. We actually deployed, the service was live in Southeast Asia. It was a serious amount of work. We had a pretty high profile in the music industry, and it caused me to realize just how hard it is to be an entrepreneur. And, the effort that you have to put in to keeping your business going, to engaging with suppliers, team members,
Yeah.
it takes huge commitment, diligence, and it's an incredibly brave thing to do. And my experience has taught me always to treat entrepreneurs with respect, no matter how crazy their ideas might be. So I always give an entrepreneur the time of day. I'm very happy to give whatever advice I possibly can, make a referral to somebody else who might be interested in helping or investing. Yeah, I mean, I've definitely learned to respect entrepreneurship through my experience.
Do you think is the magical quality? I actually love that term, by the way, and I've written it down. And you might see me. I'm just writing my notes as I'm talking to you. I think it's such a nice. What do you think is the magic quality of an entrepreneur? Like based on, like even your own experience and what you're seeing now as well. Because we're going to get into ET Capital, and I really want to talk about your Cambridge Venture Index and how you're revolutionising the ecosystem. And before we get
So I
into,
think that,
yeah.
I think the entrepreneurs are an interesting combination of two qualities. One is they are often dysfunctional in an organizational sense, that they're people who are not natural company men or women and would prefer to be doing things for themselves and calling their own shots. So that idiosyncrasy, that determination to be autonomous is an important quality often of entrepreneurs. And that's got great benefits because it enables them to have vision and purpose and direction. It's got some downside, it can make them inflexible, stubborn, persistent beyond reason. So, but on the other hand, it gives them that ability to keep going late into the night, to inspire other people if they can communicate the passion that they feel for their
Mm,
project, which can be very rewarding for other people to join
mm,
and follow, being part of something which has got a sense of purpose, that it's going to, I know it's a very hackneyed phrase, but change the world, even in a small way. The fact that it's actually going to, move humanity forward, that's a very exciting proposition. And entrepreneurs are very often very good at communicating to their teams what they're trying to do and why it's worth doing. Whereas big corporates, it all becomes a bit sort of worthy, doesn't it? And we have ESG and we have
oh, yeah.
DEI and we have,
So
you know,
it's all yeah,
strategy and, but it becomes a whole load of books, this fat, and it's
yeah,
not the
totally.
same, is it? As
And so many
being with
structures,
an
so many
entrepreneur who
levels.
is like, guys, we've really got to do this. This is going to completely change this. And it's a very exciting and innovating thing. So I do value entrepreneurs enormously highly. But I think, they are quixotic creatures. And I think one of the slight challenges for the venture capital industry, and again, this is something I learned from being an entrepreneur, and it's really reflected my approach to venture capital, is as an entrepreneur in the music industry, I knew much more about the music industry and what I was trying to do, and literally more about the business circumstances than any venture capital investor. No matter how much time you've spent in the music industry as an investor, you never know as much as the people you're investing in.
And
And
then who are building.
that was a big eye opener, was that, because particularly the Silicon Valley VCs tend to go around saying, we are we anoint the winners of the next generation. We can make the critical introductions. We can get you into the right places. We can tell you how to grow your business. Now, the first two may be true: introductions, relationships, good advice. Those are all things which venture capitalists can bring to the table
Mm,
constructively,
mm.
but they can't tell an entrepreneur how to run a business. I mean, that is stupidity and arrogance.
Yes.
And I think learning that was a very important part of my entrepreneurial journey. And so it, as you touched on in the introduction, it's informed the way in which I view entrepreneurship, which
Mm.
is we as VCs are there to create the circumstances which enable entrepreneurs to flourish and build a business, but we shouldn't be challenging them for control or interfering too much in the way in which they do that.
Love that, and I mean, I've spoken to quite a few people in the well, like people like yourself in the VC space, and I still see there is like there's almost like there's a this newer ecosystem that's forming and building, yet there's still somewhat the traditional old way of doing it, and I'm the investor and I'm the entrepreneur, and they're going head to head like this, and then there's someone like you that's had both sides of the experience, if you like, and then gone, okay, how is
Well,
this best?
I touched on the fact that I was a little bit frustrated sometimes with dealing with the entrepreneurs I backed in the 1980s. I think that there's been a big sea change for two things. I touched on the fact that there's been entrepreneurial education in many universities, so people know a bit more, quite a lot more about the business of being an entrepreneur. And then secondly, the other really important phenomenon, and I tip my hat to Paul Graham, the founder of Y Combinator. I mean, Y Combinator started a revolution in accelerators, which has spread across the world now. Seed Camp. Here in Cambridge, we've got Deep Tech Labs. The university here in Cambridge has set up founders at the University of Cambridge. So accelerator programs, which give entrepreneurs resources to help them de-risk their businesses,
Mm.
get to customers better, understand operational issues, get resources in to help them build their business successfully and execute successfully. Those accelerator programs, I think, have contributed materially
Yes,
to
absolutely.
de-risking early stage investment, helping entrepreneurs find the right way. And that's made it the whole ecosystem better in most of the major technology clusters, and easier, therefore, for me as a venture capitalist, rather, to back good entrepreneurial teams who are better equipped to engage with me. It's easier for them to
Absolutely.
talk.
Because it works both ways. It works both ways, if you ask me. It's a two-way relationship. So tell us, okay, so you've been 9 years in the what was the company called? The digital music business company called?
It was called Persona, and it was a streaming music service. And in the end, the business model we settled on after about 3 years of faffing around, I was describing that a moment ago, was to do an on-demand streaming service like Spotify, but instead of pay by subscription, it was pay per play. And you paid, the idea originally was 1 cent to play one track once, 1 penny, 1 cent to play one track once. In fact, the majors made us price it at 2 cents per play. I mean, in Southeast Asia, then, it was a completely different pricing model, but the same service. So the idea was that, if you're a teenager with a prepaid mobile, you buy a little bit of credit on your prepaid mobile, you put it into the service, and then you can
Okay.
play tracks
And so
for two cents per play.
wow, okay. And so then you've done that for 9 years and you're like, okay, I've done VC side now and I've done entrepreneur and I'm going to now start ET Capital. Is that how what happens next? And
No, Eaton Capital started in 1993. In fact, we'd raised and managed two funds before I started Persona. In fact, three rather. One was a secondary as well. So I must admit that I wasn't exclusively focused on Persona. I was doing Persona, for sort of 80% of my time, and then 20% of my time was running our existing portfolio of venture funds. So for most of that time, we had two live funds, one of which was quite new. The secondary was quite new to us, and so we had a bit of work to do on that. And then when we chopped Persona, we turned it into an intellectual property play. We've got a US patent, which we're licensing, which was the consequence of Persona. Once we'd moved to the licensing model rather than sticking with being a service operator, then that was when we started to raise some more funds. We We did a joint venture with some Chinese investors to do a fund which would look at investing in companies in the UK which could be scaled in China, and then we did a series of climate funds, and then latterly we've been, for the last 4 years we've been focused on the Cambridge Venture Index.
So tell us a little bit about the Cambridge Venture Index. I think the audience would be really interested in the whole, yeah.
Well, it picks up the theme that we've already been talking about, which is the nature of the relationship between entrepreneurs and investors in two ways. One is, what's the best way to relate to an entrepreneur to get the best out of them as an investor? But equally, how do you identify the winners? How do you know which entrepreneur is going to succeed with which idea? And I read a very good book. I would highly recommend it, by Robin Wigglesworth, was the FT's market editor, called Trillions.
Trillion.
I mean, it's a slightly corny title, but it's a
It is.
brilliant book.
Yeah.
And it's about the index fund revolution. And it
Mm.
starts off basically talking about the story of Jack Bogle, who was the founder of Vanguard. And Jack Bogle in the 1970s came to the conclusion that active fund managers on the public markets in the US could not consistently pick winners.
Mm.
In the end, the index would outperform active fund management. Reading that, and by that time I'd done 30 years as a venture capitalist, I thought, well, actually, if you think about it, the public company, you've got a lot of data published, it's very transparent. A modern public company is forced to disclose a lot of data quarterly in the US, biannually in the UK. They're also tend to be quite large, and they're sort of quite well regulated, and the management team has got a proven track record generally. Businesses are quite well understood, etc., etc., etc. And even then, it's impossible to pick the winners consistently. So think about venture, where you've got a company which is completely new technology, potentially no market or a completely brand new market,
Mm.
no completely new operational infrastructure, a management team that's coming together for the first time, that
Yes.
probably hasn't had a lot of general management experience beforehand. They may
Right.
have come out of research or whatever. So with all those variables, you're making it even harder to predict the winners as opposed to those who are going to fall by the wayside. So I thought that looking at the example of the index funds that Bogle was building, why can't we find an index fund for venture? Now, there
Mhm.
isn't a public index, compiled by Moody's or Standard & Poor's, but instead, why not use the cluster, the Cambridge cluster, as a proxy for an index? And so the idea was very simple, which is if you invest on every credible deal coming out of the Cambridge cluster, if you could invest in every or as many as possible, then could you build a fund around that approach? And
Mm.
we took a data set that we got from the Judge Business School, the Cambridge University Business School, and crunched the numbers. And it showed that since 1995, if you took this approach, then you would consistently have had a 100 index. It's a UK stock market index. You would have had a FTSE 100 index beating performance throughout that period, apart from 2000 to 2004, the immediate aftermath of the dot-com crash. So it looked to us as though this approach was going to work. The data showed that this approach would work, even though, of course, as we all know, and the data bore this out, that you're in every cohort of every 10 companies, you're going to get 2 that are successful,
Mm.
5 that are, also barely return the capital that was invested, and the remainder go bust. So it's a brutal winnowing, and that winnowing is inescapable, really.
Mm.
But if you get the right exposure across the all the businesses are being formed, and it's in an ecosystem which is generating really good businesses like Cambridge or Oxford or Silicon Valley, and then on balance you make money by taking this diversified approach. And the second quality, the one we were talking about, entrepreneurship, it means that we can sit back as an investor, put money into these companies and say to the entrepreneurs, look, call us when you need us. We're supportive. Let's talk from time to time, and you can tell us how it's going, and we can say to you, well, we had a previous deal which did this or did that, but we are absolutely not interested in interfering in the way in which run and build your business.
Mm,
We're there to support when you want it,
when it's
but we're
needed.
not there to fight you for the tiller.
It's fascinating. I've got so many questions, and you might think I'm a bit random's the wrong word. I'm just
No,
thinking
no,
about
no. I mean, it's a rich seam of
yes.
ideas, isn't
No,
it,
it is
around?
it is it is it is really rich, and you've got this winners piece and, obviously the index fund and the ability to determine who is potentially going to be the winners, and yet we're in this world of uncertainty, right? Everything is up for grabs at the moment, and I'm interested in your thoughts on this because it does feel like each week I mentioned to my business mentor the other day, I feel like we're in this tech avalanche. He goes, "I'm gonna write that down." And he's in health tech, and he's like, because every week it's changing, everything's changing from an AI perspective, and the tools and the models you can use and what you can build in your business, and especially, and I'm a founder of my own company, and as an entrepreneur, you can get all excited around all these shiny objects and tools, and you got to get back to, like you say, your purpose and what you're there for, and your vision and your business strategy, and obviously, your financial targets are very important. Where I'm going with this is in terms of with the index fund and predicting and because of the data that you are able to extract and the ability to then determine, and I may not be getting all this right. What I'm understanding from listening to you is, and then understanding the winners and who you invest in, etc. With education and, for example, business school and AI and like everything changing, does this mean then the index fund has to continue to change as well, or does it get impacted by the uncertainty of the world we're living in right now? Is that making sense in terms of what I'm asking at all?
Used so we're looking at investing in businesses which come out of the accelerators in the Cambridge
Yes.
and some other organizations which we
Mm,
see as being credible deal originators.
mm.
Cambridge is a phenomenon called the technology consultancies, the first of which was Cambridge Consultants, which for a while was part of Arthur D. Little and is now part of Gemini, founded in 1960. The idea was very simple, which is that Cambridge had a big pool of doctoral and postdoctoral researchers who had worked on real-world problems, and why not put them together in an organization which sells those services to large corporates? So, Boeing, Ericsson, Fiat, whatever, all those big companies over time have bought services, technology research services, applied technology research services from Cambridge Consultants. Of course, that gives those guys the ability to identify new technologies that might
There
be
you go.
deployed as
Yeah.
products in the future. So Cambridge Consultants is where Cambridge Silicon Radio, the Bluetooth
Mm,
company, which was ultimately bought by Qualcomm, came from. So they, as well as the accelerators we talked about before, founders at the University of Cambridge Deep
yes.
Labs, are a rich source of deal flow, where the entrepreneurs have been helped and either have had experience in commercialization or have been helped
Yeah,
to
so that's set
hone
up.
their
Yeah.
commercialization skills.
Yeah.
And the base technology is good technology
Yeah,
because it's
great.
come out of Cambridge Consultants or it's come
Incredible.
out of the university's research labs. So I think that so long as we've got people whose skills are being honed and amplified and helped, and also great technology coming out of, either really good research or really good applied technology coming out of the technology consultancies, then we got a sort of a load, a seam
Yes,
to
yes,
mine,
absolutely.
which we can continue to mine going forward. And I think all that AI does is it changes the way in which the seam is exploited.
Yes.
It improves the ability of those teams to execute. AI is an enormous enabler. It's a great.
No, I agree. I absolutely agree. What about the human intelligence? I have a couple of last questions for you. What about, like, you talked around, when we caught up the other week, you talked about the human journey and the human intelligence piece. How important is that as an entrepreneur right now, do you think? Like, I mean, for me, I think it's more important than ever, and not losing sight of, that human, who you are, the human aspect in general. What's your view on that?
It's funny you should mention that. I listened last night to a talk in Cambridge um, by one of the original co-founders of CMR Robotics, which is a Cambridge robotics company, which has been very successful doing robotics for surgeons to use in complex procedures.
Mm.
Martin talked about being true to yourself. It was exactly what you've just mentioned. And because there's such expectations, people, there are so many caricatures and stereotypes of what the perfect entrepreneur looks like and how you should behave. And his point was very, very simple, which is in the end, you've simply got to be yourself.
Thank God
You've
for
got
saying
to let
that.
the inner you come out, not be what other people want you to be.
Absolutely.
Because if you've got the imagination, the will, the adaptability, the passion, that's going to come out when you let yourself free, if from
I
want of a
agree.
better phrase. So I really do think that in an age when there are such high expectations and
Mm.
some high exposure to stereotypes, to ever such polished people in the influencer world or just in social media generally, then don't worry. Actually, what people want to get to is not the polished surface; it's the inner you.
Well, I'm
What
not
you're actually
polished.
saying.
I'm not a polished, you know what I mean? Like, you're like, I see you as such a polished person, right? You
But you know what I mean. You know what I mean.
no, I know.
You look divine. You look
Thank you.
crumpled and old. But so what? Both of us are
Very much,
connecting.
and
We're
we are
connecting,
connected.
aren't we?
We're
We are
completely
connecting because
connected.
the inner B and the inner Martin are connected and are
I agree.
there's a sort of direct sense that we understand each other and we're trying to get to common
Totally.
understanding, and that I think is really important as an entrepreneur. And I think that works with suppliers, it works with customers, it works with
Absolutely.
investors, it works with your people.
Yes.
And I think also the other thing is that entrepreneurs have got to be prepared to show some weakness,
100%.
where they turn around and say, look, particularly to an investor, because I spend a lot of time being an investor, obviously, an entrepreneur that comes to me and says, look, we screwed this up. This went spectacularly wrong. We completely blew this apart. However, here are the lessons that we've learned. And this is what we're going to do in the future to avoid this
Yeah,
happening again. When
absolutely.
I hear an entrepreneur say that to me, I think, wow, God, I'm glad I backed this person.
Yeah,
Whereas
100%.
if they say, oh, there's no problem at all, you you think, God, they're
Yes.
delusional.
No, yeah, it's such a good conversation, and I love the way we're kind of winding this up in terms of ending for the listeners and the audience, because like I have conversations with people like yourself and I'm like, I could be come into this really nervous and concerned and be like, I can't have a conversation with Martin Rigby because he's like has got this incredible career. He's in terms of from a VC perspective and what you're doing, and I don't have all the knowledge. At the end of the day, though, this is about understanding exactly what you just said, connecting and coming to a mutual common ground where the conversation it has an ability to be able to be shared in a way that makes sense to you and it makes sense to me, and then we come together. And I think that is what I'm learning about myself as an entrepreneur as well, because who knows whether down the track I look to not just stop bootstrapping and look for investors, etc., or I might eventually go, I've got this in my head that I think that I will eventually, whether it's angel investing or investing myself, because it's something that I'm looking at thinking this is really interesting and playing that advisor investor type role. And so I think it's great that we can have these conversations like this.
Identify each other's talents, which is really
Yes.
important. Because
Yes.
surely the most generative outcome is that I recognize your talents and make sure that you're able to deploy them to best effect for you and to my benefit as well, and vice versa. I mean,
Absolutely.
that's surely, you talked about respect at the beginning of our conversation, and I think it is seeing and respecting and valuing the talents of others and enabling them to be deployed to mutual benefit.
Absolutely. So one last question for you, and I am going to ask you this because you have played or, been on both sides, and, there's this whole, I guess, way that the expectation is, that you need to work really hard. And as an entrepreneur, if you're not careful, you're working 20. What's your view in terms of the ability to have that active recovery and the ability to be able to switch off so that you can get those fresh perspectives and the clarity? In terms of what I mean?
I think that's absolutely right. I mean, I do remember I went to part of my military career was going to do the junior command and staff course, which is sort of like an
Yeah.
early MBA for soldiers. And the man who ran the staff, this particular part of the staff college, was a chap called John Foley, who he was a most learned, charming, elegant man. And he said at the beginning of the course, he says, "We're going to give you much more to do than you can possibly do. You know, if you do everything we tell you to do, you can't do it. You'll be up for 24 hours a day, you still can't do it." So in the end, for entrepreneurs, which is true for staff officers in the middle of a war, is you've got to concentrate on the essentials and not worry about the fact that other things don't get done. Entrepreneurship is about concentrating on the essentials and not worrying about the other things not getting it done. Some
Oh,
things
I
will
love
not
that.
get done.
No, I know.
And going back to your question, the essentials includes looking after yourself. It
Yes.
includes taking exercise, doing the things you enjoy doing, relaxing, being with your family. If you don't make time for that, you'll kill yourself. Or you'll have a life which isn't worth living.
Yeah. Oh, man, this has been the best conversation. I really feel like I just want to jump through the screen and give you a massive hug and kiss and say thank you so much for coming on the show. It's been
I've
really,
enjoyed it so much. Thank you so much, B.
I've really enjoyed it. Thank you so much, Martin. How do we find out more about CT Capital? How do we find out more about the index? I'm not saying it properly. I just lost my notes in
So
front of me.
etcapital.com is our website, and it's got lots of nice links to the Cambridge Venture Index Fund,
There it is. Yes, I lost my train
and
of
people
thought for
can
a
find out
second.
more about it. And we're running a series of webinars at the moment. So LinkedIn, we've got a nice profile on LinkedIn as well, where Max and his colleagues have put the dates for the
Absolutely.
webinars. Anybody's welcome to come and find out more about the Cambridge Venture Index Fund. And thank you so much for talking to me. I've really enjoyed it. It's been
I'm
fantastic.
looking I'm looking forward to your book one day, Martin. I think you're going to have a great book, and it'll probably be some fascinating headline. But I am looking forward to your book. And yeah, thank you so much for your time, and have a lovely day. And yeah, thank you.
Thanks very much, B. Bye-bye.
Bye. Thanks.